Friday in 18 October. This is the weekly chart annotated at the opening prices. The weekly fair value gap that I want to see inverse. Then we have this daily fair value gap. I want to see this inverse. And why do we want to see this inverse? Because we move in a volume imbalance. We drive higher, and we have a problem in here. Is that we stop. This needs to go. That we stop at below the consequent encouragement of that wick, which now still we can draw down to this potentially. So if you look at the 4 hours chart, it looks very clean in here to take out primary buy side, and this is primary sell side. Also relative equal lows in here, but still pretty bullish because of this volume imbalance in here, this order block in here, like that, and we have a clustering of a weekly volume imbalance, and we draw down into that also. Then on top of that we have this weekly order block, but that's not relevant anymore. Yeah, that's still relevant, but for this price action we could still spool down in here. We draw up in this order block and we close just not at the midpoint of that order block. So I would like to see that trade up to, and yeah, but we still can see some bearish price action coming next week, possibly taking out this. We take a look at the ES for a minute. Watch what that's doing. Of course we compare that with, so we have here these lows, and then it's the same as this. We don't need to do that. We definitely don't need to do that. On the 4 hour chart, this has now been made jagged and this is now clean, and this on the 4 hour chart, it's the opposite. We have an SMT in here, so this low and this low. Oh no, excuse me, this, hold on. Yes, this is the SMT. I'm looking for something more like this, right? Let's look at the Dow daily chart, 4 hour chart. Higher price. I just want to see higher prices. Okay. In the end today we were bullish because we have this fair value gap in here, this 1 hour fair value gap. I'm gonna make that darker a little bit now. And then we have this low, high, lower, low, higher, high, and then we have this breaker block. So everything was bullish, and we come from a bullish momentum. Everything is still bullish. So when we drop down to the 15-minute chart, this, I hope that was correct. This is the daily wick then. Yeah, this is a daily wick. This daily wick. And we have minor buy side in here, and then we had that primary buy side, minor buy side, 1 hour chart, minor buy side, 1 hour, 50-minute chart. I'm gonna change my internet connection. Waiting. Okay. Okay. No, it's still okay. It's a little bit better. So we come from this 15-minute chart, 15-minute order block. These 3 consecutive down close candles were all 15-minute order block, but we take this final order block in here, and that is where we drop down to initially. And this is the price action, and then at 9:30 we leave that open. We draw down to the midpoint of that opening range gap. Then we draw higher, we inverse this, we take a buy side in here, and then we draw lower at 9:50. We want to spool, and as you can see, we also in here at the high of that, the midpoint, something like that, we draw up to that, and at 11:30 we close that entirely down. So we trade lower. If we want to see lower prices, then I want to see price the first percentage value gap leaving with momentum. In here we don't do that, we show bullish momentum. So in here we could long entry, but I was long in here already, and in here we could have also long. Let's do that like that, and then in here we move lower. In here we could possibly take out this low, so we could possibly have shorted in here. I don't want to. I don't think that's high probability. This is high probability somewhat, and then short in here, trade down to the midpoint of that. That's 20 handles. Okay, yeah, we could take that. We form relative equal highs. We sweep that, we form relative equal lows. These, after the sweep, we have a volume imbalance. We drop down, form relative equal highs again in here. Then we drop low. We see we have a trend line in here, so breakout artist will think, okay, the price will now go down, but my eyes are on here, still bullish, and we come in this second macro, and then we trade up, and then the rest speaks for itself. Check out this high, this value gap that caused it. We inverse that, trade back into that, trade down to the low of this, or people hit their stop loss of that triangle stuff. Inside the second macro, this one is just outside it, this one is just in it, boom, and we pull out, boom. So that's it.